The decision to purchase a life insurance policy is one that many people make when they're navigating through life as a young adult or when they find themselves with dependent children of their own. What many people don't know is that life insurance can be purchased for the children as well, and it has the potential to be a savvy, forward-thinking investment decision. Many people don't realize that life insurance on children is not only just a preparation for the unthinkable, but it can also be leveraged as a powerful investment tool. And it can guarantee future insurability for the child down the road. Life insurance for your child might not be on the top of your mind when you're in the midst of feedings and diaper changes, but it's well worth looking at the pros and cons and deciding whether it's the right choice for your family. Just like a typical adult life insurance policy, a children's life insurance policy is a contract with an insurance company that involves the premiums which are paid either monthly or annually in exchange for the death benefit if the child were to pass away. For most adult life insurance policies, the policyholder tends to be the insured person covered by the policy. When it comes to life insurance on their children, however, the policyholder is usually the child's parent, grandparent, or legal guardian. The policyholder is most often the beneficiary, who is the person who would receive the payout if the child passed away. The process of purchasing life insurance for a child is typically much quicker and simpler than buying life insurance as an adult. It requires that you fill out an application, but there's usually no medical exam required for children. Generally speaking, a parent or a guardian can purchase a policy for a child who's up to or less than 17 years old, although that age limit could change depending on the case. The insurance coverage can remain intact throughout the child's entire life, as long as the premiums are paid, and the policy ownership and the premiums can be then transferred to the child once they become an adult. If you're interested in purchasing life insurance for your kids, you have to decide on the type of policy. You'll generally have to choose between a term life policy and a permanent policy. And there are some things to note when you make this decision. Most life insurance policies for children are whole life, which is a permanent policy that provides lifelong coverage as long as the premiums are paid. Those premiums are usually guaranteed, which means they don't increase over time. Additionally, a portion of the premiums goes towards building cash value, which can be then accessed by the child later in life for things like education, investment planning, and even retirement. While the coverage is lifelong, it's important to know that the payments don't have to be. Many whole life insurance policies can be set so they're fully paid off over 20 years, 10 years, or even less, while the coverage lasts through the child's lifetime and the cash value and the death benefits continue to increase. Term life insurance policies, however, provide coverage only for a certain specified number of years. The premium remains the same for the length of that term, and the funds are only accessed in the case of a tragedy. Since the probability of a child passing away, thankfully, is very low, these inexpensive policies can also be added as a child rider to your own personal term life insurance policy. This is an inexpensive way of maintaining future insurability for your child and giving you the option to make the policy permanent in the future. Purchasing a life insurance policy for your child generally comes with three main benefits. It protects against expenses related to the child's death. It helps to set the stage for insurability in the future. And it can be used as an investment vehicle or as an alternative to an RESP or another savings plan. Now, no parent wants to think about the possibility of their child passing away. The unfortunate reality is that accidents do happen and certain things are out of our control. It will also provide some funds that will allow you some time to be away from work. It helps to take the hardship out of a very difficult situation. The earlier in life that a person acquires life insurance, typically connected with the lower the cost of the premium will be. This is because the probability of somebody passing away at a young age is much less likely than somebody who's much older, for example. By purchasing life insurance for your child, you are effectively locking in a lower premium rate and future insurability versus if they were to purchase the same policy for themselves as an adult. Doing so also ensures that if the child develops a health condition at some point, which would typically make them uninsurable or more expensive to insure, then the insurance you've already purchased for them will remain in effect. The benefit of this future insurability is always an asset, but it's especially important if your family may have a history of conditions that might later make the child uninsurable if they were also diagnosed. Whole life insurance policies can provide tax-free growth on the ability to withdraw from the policy and use those funds later. as collateral on a loan, for example, that you can put towards education or as funds for retirement. Depending on the details of the policy, there are also opportunities to choose how to invest that money. Unlike other investment avenues, life insurance has the potential to skip certain estate taxes if the insured passed away. This means that life insurance for your child is not only a strong investment vehicle, but it can also be a smart way to help with estate planning. So, should you buy it? Well, while life insurance for your child is not required, of course, it could be the right choice to protect your family in case of disaster, and more importantly, to set up your children for future financial success. The right choice for you will come down to your own values, your goals, and the specifics of your particular financial and family situation.